Russia's invasion in Ukraine has changed the world as we know it forever when speaking about energy. An industry that was on a long downward trend over the past few years is again on the focus of investors. The oil and gas industry has been outperforming the market in March, and this trend seems to be here to stay. An entire continent wants to break the stranglehold Russia holds over its energy supply. I'm speaking about Europe, of course. And there is a company based in North America that could benefit from this energy transfer. This is one of the largest energy companies in the USA, with more than 90,000 miles of pipeline and associated energy infrastructure in 38 states and Canada, and international offices in China and Alberta. It supports some of the biggest, most prolific energy regions, such as the Anadarko Basin, Barnett Shale, Haynesville Shale, Eagle Ford Shale, and Permian Basin. While natural gas producers will be the primary recipients of new supply contracts from Europe, companies like Energy Transfer that process and transport gas supplies should do well. It's estimated that European demand for US gas should double over the next few years as exports grow to 50 billion cubic meters annually through 2030, if not beyond. At least 15 billion cubic meters in additional supply has been pledged to Europe by the Biden administration for 2022. The US Energy Information Administration says the US produced record amounts of natural gas in 2021, the seventh consecutive year it notched a record, most of which was for domestic consumption. It predicts production will increase 25% annually through 2030 before leveling off. Most of the new production will occur in the Permian Basin, if for no other reason than its proximity to refineries along the Gulf of Mexico. And with the need to transport these energy supplies in high demand, Energy Transfer seems to be a pipeline operator well positioned to continue rising as it did in March. Energy Transfer is favored by elite hedge funds. Here's what Miller Value Partners said in his letter to investors for Q2. Energy Transfer rose over the period along with the price of oil, climbing almost 40%. The company received positive news that the Dakota Access Pipeline project will not be shut down, while the environmental impact statement by the US Army Corps of Engineers is drawn up. Energy Transfer reported strong Q1 results with revenue of $17 billion, surpassing expectations for almost $12 billion, with adjusted earnings before income hitting $5 billion ahead of consensus $2.77 billion. The company raised full-year adjusted EBITDA guidance to almost $13 billion from $10-11 billion previously, with the increase largely related to the benefits realized from Winter Storm Uri. The company paid down $3.7 billion in debt during the quarter, using strong cash flow to reduce leverage. The company also announced the issuance of $900 million in 6.5% series bonds, with the company using the proceeds to repay debt for the general purposes. If you want to learn more about Energy Transfer, continue watching my next video when I spoke about Energy Transfer when its share price was $6. And don't forget to comment, like and share this video.